Hello everyone and welcome to Chinese Stocks channel 中国股票频道 I'm Michael and today's video is about a company that can become the biggest winner of November. It's a company with a market cap of around $4 billion, started trading in the Nasdaq a year and a half ago and saw an amazing growth of more than 300% year to date. But this growth will not stop as its blockbuster month is about to begin, and this might be the best timing to buy its stock. Today's video is not about JD nor about NEO, stocks that I love so much. Today's video is about one of the leading brokerage companies in Asia, the Robinhood of China, FUTU Holdings. For those of you who are new to FUTU Holdings, it's a company that I covered in my channel 2 months ago, a company that its stock had an amazing run in the last few months from its March lows of $8.16 a share all the way to $41 a share in early August. The stock saw a moderate decline since and is traded today at around $29 a share. There are massive updates and news coming from China that makes me think that this stock is going to enjoy a very nice ride in the coming months, and so I wanted to share my ideas and thoughts with you. Before we start, I'd be more than happy if you hit the like button and subscribe. It helps the YouTube algorithm and will make it easier for me to release more content about Chinese companies and their stocks. So in today's video, I will start with an introduction to this fast-growing company and its business model, continue to its second quarter annual report numbers, and finish with the super bullish news coming from China in the last few days, news that can make FUTU stock rise dramatically. Founded in 2007, FUTU Holdings became one of the fastest growing online brokerage service and wealth management companies in Asia, with more than 9.3 million users, up more than 52% year over year. The number of paying clients passed the 300,000 with more than 100,000 new paying clients during the last 2 quarters alone. This addition of 100,000 clients exceeded the company's full-year guideline for 2020, and as a result, FUTU lifted their yearly guidance to 280,000 new paying clients by the end of the year, which translates into 141% year-over-year growth. FUTU provides investing services through 2 digital platforms: the FUTU Niu, also called FUTU Bull, directed at the Chinese market, and Mumu, which is directed at the American market. The platforms are accessible through any mobile device, tablet, or desktop. Those platforms enable users, and mainly mainland Chinese citizens, to buy and sell Hong Kong and US listed shares, as well as domestic listed A-class Chinese shares. FUTU's primary fee-generating services include trade execution and merchant financing, which allows their clients to trade securities such as stocks, warrants, options, and ETFs. They enhance their user and client experience with real-time market data and news, research, investors community group, analytical tools, and more. So FUTU aims to transform people's investing experience by offering a fully digitized brokerage and wealth management platform, but the mission is an incredibly challenging one when it comes to China. China's strict money and capital control makes overseas investing, including in territories like Hong Kong and Macau, a very challenging one. As of today, Chinese citizens can't invest in foreign securities through mainland Chinese banks and must use a middle brokerage company. While it is possible for any Chinese citizen to use FUTU's platform, the process is still a bit complicated and requires opening of a bank account in Hong Kong or another overseas area. And so FUTU is primarily serving the emerging Chinese population that already has foreign bank accounts, and the number of such potential investors is big enough. It is believed that by 2021, private wealth of Chinese citizens kept outside China, including in Hong Kong, will reach around $23 trillion. So up to now we covered FUTU and its business model. For more into-depth analysis about FUTU Holdings, you're welcome to check out my previous video about the company. And now let's dig into some numbers. The total revenues of FUTU for the second quarter of 2020 were $88.7 million, an increase of almost 165% from the $33.5 million of the second quarter of 2019. The first half of the year, FUTU had total revenues of $152 million, which are an increase of 137% from the $64 million of the first half of 2019. Those revenues were even higher than the 2019 full year revenues of $136 million. As per the net income, it increased by 327% to $30.5 million from around $7 million in the second quarter of 2019. Together with the net income of the first quarter, the total net income for the first half of 2020 was a bit more than $50 million, while the total net income for the full year of 2019 was only $21.2 million. So, as we can see, FUTU is a fast-growing and profitable company, but what investors care about the most is that those numbers will be sustainable ones and that the company will be able to continue growing in a fast pace. So here comes the bullish part: why FUTU and why now? In the second quarter earnings report, the chairman and CEO of FUTU said that the subscription for JD.com and NetEase's Hong Kong IPOs both exceeded 15 billion Hong Kong dollars, which are around $2 billion US. They believe, he said, that the surge of high-profile Hong Kong IPOs will act as a major tailwind to their growth. So FUTU CEO said something about tailwinds. Here comes a real hurricane. Investors pour $3 trillion into world's largest IPO of Ant Group and becomes the record holder in terms of number of retail investors and subscription sum in Hong Kong IPO history. And banks and brokerages in Hong Kong lent about 500 billion Hong Kong dollars in total margin financing for the retail portion of IPO. And it continues. A record of $2.85 trillion of bids were received from retail investors for Ant's shares on Shanghai Star Market, exceeding the supply of shares by 870 times. In Hong Kong, 1.55 million retail investors, or about 1/5 of the city's population, put in 1.3 trillion Hong Kong dollars, which are around 167.7 billion US dollars, for the shares when the book closed at noon on Friday, overbidding by 394 times. According to people familiar with the matter, this is just crazy. And here a managing director of Hong Kong-based brokerage Wealthy Securities says, the offering is so hot that more than 1 million retail investors have sent their subscriptions. It is a historic moment for Hong Kong's securities market. As I mentioned in my last video about Ant Group, the company offered 1.67 billion shares each in Hong Kong and Shanghai in order to raise about $34.5 billion US dollars, making it the world's biggest IPO. But as it looks like, this IPO is going to be even bigger, with the total size of IPO increasing to $39.67 billion. Crazy. The hype around this IPO is so massive that some people are even willing to front significant amounts of cash for Ant shares despite not knowing what the company does. Li Wing-chun, a retiree in his 70s, wants to borrow 90,000 Hong Kong dollars to leverage his 10,000 Hong Kong dollars investment. I don't really know what Ant Group is doing, he says, but you will always win from subscribing to new stocks. I've almost never lost money. So this is the mindset of people from China and Hong Kong when they think about Ant Financial IPO. Many people are betting on their savings and loans, doing everything needed in order to take part in Ant's IPO. And as you see, brokerage companies are profiting from this situation massively, and FUTU Holdings is without doubt making profits like never before. The amount of users using their platforms will grow, the amount of subscriptions is huge, the amount of transactions on IPO debut will be massive too, and I think FUTU is going to see huge gains. So this was Ant Financial, but the story with IPOs doesn't end here. JD Health, the biggest online pharmaceutical retailer in China, a subsidiary of JD.com, a company that I also cover here in my channel, filed for IPO in the end of August and is going to ring the bell in Hong Kong Stock Exchange probably at the end of November, beginning of December. JD Digits is going to IPO in Shanghai probably at the same time. And even TikTok is looking for US IPO in the coming few months. IPO season just started, and in my eyes this month is going to be unforgettable for FUTU. The company is going to release its third quarter earnings report in the 27th of November, and although this month's earnings won't be included in this report, I'm sure we will get an update from FUTU revealing the gains for this month. So this was my bullish thesis, but I'm not a financial advisor. I might be totally wrong, and sometimes the stock market is moving in a totally different way than what we expect. With US elections around the corner, lockdowns in Europe, and who knows, maybe a future lockdown in the US, we saw sell-offs last week, even of companies that reported massive earnings. Volatile weeks ahead, investors will buy more when they see opportunities, sell if they get afraid, and FUTU will be there with every transaction. I myself invest in FUTU. Nothing in this video though is to make you buy or sell its shares. This is just an introduction to the company. Before you decide to invest in any stock, make sure to make your own research. So that's it for today. Thank you for watching. If you like this content, make sure to hit the subscribe button below, give it a like, it helps the YouTube algorithm. See you in the next video and have a great day.